Adam today is just such a major nightmare.
No worries.
Like
No, it seems
basically
to be
crazy.
working.
Yeah. Okay, perfect.
Nice.
Hi, Cody. Welcome to Venture with Grace.
Thanks, Grace. Thanks for having me. Really appreciate it and excited to be here. Sorry it's so rainy
Yeah,
for you
okay.
to get in today.
1 second. Let me just quickly, maybe we could, okay. I'm thinking, 1 second. Let me just, oh God. Can we sit over here?
Yeah.
Just
of
because I
course.
want to
Yeah.
avoid the
whiteboard.
Yeah. Sorry.
There might
Okay,
be
thank you.
backlighting from the window though.
Yeah,
so we'll
I
see.
like the window.
Okay.
Okay, perfect. Okay, thank you so much.
No,
Okay.
thank you.
So to start the show, I would love for us to learn more about your background. So you work at Point72. Before that, you work at Benchling, and why don't we start with your operating experience there? What were something that you've learned early on in your career that especially working at these fast growing companies?
Yeah. Do you prefer I look at the camera or look at you or
Whatever
any
you
preference?
want.
Okay.
Whatever you want.
Yeah. So hey everyone, my name's Cody. I'm an investor at O1 Advisors. We're an early growth stage firm based in the San Francisco area. Happy to give a little bit of background on myself. I grew up in the Seattle area for most of my life, attended college there, and started off my career primarily in finance on the investment banking side of things before moving over to an operating role over at Benchling, where I helped to lead strategic finance and go-to-market strategy side of things, and really had a great experience understanding and overseeing a lot of our growth at the time when we were scaling from under hundreds of millions of ARR to over hundreds of millions of ARR. And so great experience there, and wanted to be able to work with more companies similar to Benchling that were really accelerating in growth. And so that's really what propagated and jump-started my venture career, where I first had the chance to help out on Point72's growth venture capital team back in 2022, where I really had the chance to dive deeper into Series B and beyond companies, primarily on the B2B software side of things, and had the chance to partner with companies like Boulevard and Elise AI and a couple others, and really just enjoyed my experiences there. I joined the team here at O1 Advisors fairly recently. We're an early growth stage firm based here in the SF area, and here we're primarily focusing on Series A through C, AI infrastructure and DevOps companies. And our whole premise, should I give some background on the firm as well?
Totally, yeah.
Our whole premise is that we were originally founded by Dick Costello and Adam Bain, the former CEO and COO of Twitter. And so our kind of strategy is to be able to partner with early stage startups, Series A through C, and really help partner with them on the go-to-market side of things over time. We've fortunately had the chance to scale companies from 0 to, I think, over 120 billion or so of ARR collectively as a group. And so we've been fortunate to be able to just oversee a ton of growth, learn a lot of the challenges and lessons along the way. And we want to really just be able to share some of those thoughts for founders that we're partnering with. And so have done a couple of DevOps and infrastructure deals here so far, and big fan of vertical SaaS as well. And so, yeah, that's kind of the high level overview of where we are and what O1 Advisors is.
Amazing. Okay, so I want to maybe start with what are some trends that you're seeing in the AI infrastructure space? So since we're briefly checking about Kathy's posts, and I feel one thing that she mentioned in the most recent post was about essentially what is a digital native AI tool. A lot of AI tooling are technically GPT wrappers or just something that's lightly depend on AI. What are something that you're seeing in the infrastructure space or dev tool space that you think are actually fundamentally leveraging AI to do something meaningful to impact how they're developed?
Yeah, that's a great question. I think there's a couple things. The first is that there's, in terms of infrastructure tools, there's really the platforms out there today to help startups really scale up on the AI side of things very, very quickly. So whether it's on the cloud application deployment side of things or the inference and ML model deployment side of things, there's companies and platforms out there that allow engineers and companies building on AI to really scale up very quickly. We've seen that across a couple companies now, where they're seeing a lot of tailwinds behind AI companies that are growing on their platforms, seeing significant expansion, and that's really helped for their overall upsell and kind of net dollar retention. So I think that's one thing. The second part of it is really their selling motions. A lot of these companies historically have been more PLG led, and that's been amazing to see, and just been able to see kind of their how they've been able to scale up their customer bases without very much marketing at all. They either have had no go-to-market teams or haven't just necessarily invested in it in the past. And so it's been awesome to see that as these companies are focusing a little bit more on top-down go-to-market sales, then it's really accelerating their growth curve even more. So they have kind of both motions working now, and I think that's been awesome to see. And then maybe the third thing is I think the founders in this space just really understand all the different AI companies that are performing really well, especially when it comes to vertical SaaS, for example, and which vertical AI companies that are performing well. I think you're definitely right in the sense that there are still kind of GPT wrappers today, but a lot of companies on the vertical SaaS side of things are developing more kind of proprietary features and data sets that are helping them to create more of a technical moat over time. So yeah, that's kind of what I've seen so far.
Maybe we could use your like one of your past investment. Like maybe we could start with like Elise AI. Like since they're in the real estate space, like why don't we talk about like the general landscape of the space and like what are things that AI can fundamentally help the company to leveraging AI to actually improve the efficiency in the space.
Yeah, for sure. Big fan of Elise AI. We were fortunate to partner with them at Point 72 at their Series C, and so have known the company for a while now, and big fan of what Minna and the team are doing. So with Elise AI, they really kind of saw the AI trend very much ahead of time. They saw that there was going to be a need for additional automations on the communications piece, on the workflow piece for property managers, and maybe to give a high-level overview first. Elise AI is essentially an AI platform for property managers to automate a lot of their workflows around tenants and potential tenants. And so helping them figure out how they can maybe automate communications between them, answering questions, answering maintenance requests, and just really keeping more and more tenants in the loop and handling more and more tenant requests as well. And so they really kind of saw the AI trend ahead of time because they were able to see how developing foundational models internally within their platform would lead to success later on. And so with Elise AI, and maybe to answer your question more directly, I think what's been awesome to see about them is that from a technical moat perspective, they started developing a model internally early on, and then they've continued to add on additional workflows to their platforms so that they're more ingrained within their customers. And so with some of the property managers they're working with, they're doing the CRM piece, they're doing the communications piece, doing even kind of the billing side of things and rent request side of things. And so they've really expanded their overall kind of product moat over time. And I think that's been great to see just from a stickiness standpoint. I think the Yardis and Tradas and Real Pages of the world just haven't really necessarily been able to focus as much on the workflow automation and communication piece of things over time. And that's really where Elise found a wedge and has performed super well so far.
I wonder when it comes to like, I guess like the real estate space in general. So I think like, I believe Demi mentioned a little bit about like, the unit or like how like basically I think I was asking the question about like how do you measure the unit economics and like also like you mentioned about like previously it was like the PLG like go-to-market strategies. Like what are some like newer go-to-market strategy that you're seeing for the AI companies? And then like a lot of companies already have been implementing AI since like 2018 or something. Like what is the major difference between back then and now?
That's a great question. I think in terms of go-to-market strategies, so PLG is a big one that we've seen so far with a lot of the infrastructure plays because they haven't necessarily had to focus on just creating a top-down sales motion historically. They've gotten customers inbound through just as they've continued to develop more and more of their own AI platforms and models, been able to get more inbound deal flow that way. I think some of the more unique kind of go-to-market strategies that we've seen is just there's more and more partnership opportunities with different kind of LLM providers and different kind of models overall. And so what we've seen is that some of the vertical SaaS players are partnering with the OpenAIs, the Anthropics of the world, specifically with their specific vertical team. And so, for example, OpenAI's education team has been pretty big on partnering with different educational startups in the space. And so as companies have been rising up in more of the AI for education space, I think OpenAI has done a great job of just partnering up with these companies, sharing the opportunities that these companies are creating. And then that's in turn created more of a partnership and inbound strategy for a lot of these vertical AI companies. Excuse me. So I think that's one thing. The second thing is I think just overall kind of community events, hackathons, et cetera, in the Bay Area have been really helpful, especially for very early stage startups, just to gain more traction, be able to put their name out there, and figure out how they can scale up within the community first before they're thinking about the Series A or Series B side of things.
I wonder when it comes to like, since you have experience in growth stage investing, and then now you're in like early growth, which is like A, B, that like in different stages. And I wonder when you're thinking about like, since you also did angel investing and AI startup, and like why don't we talk about like, how are you thinking about the startups differently, since you have the length of like growth and now early growth? Yeah.
Sure, yeah. So I think growth versus early growth versus angel investing, it ultimately comes down to, I guess, just different perspectives when investing. And so on the growth side of things, especially at Point 72, I think some of the big focuses were around just metrics overall and how the company had performed to date. So looking at their historicals, looking at how they've acquired customers, how efficient they've been as a business, and happy to dive into kind of more specific metrics as well later on. But we were looking more into just kind of how efficient they were as a business and how well they've been able to retain customers. And then based off of that, we were then able to essentially extrapolate or figure out what's a reasonable valuation for that company so that we can continue to invest and partner with them and see their kind of longer term growth. And so with Elise AI and Boulevard, we definitely saw those longer term opportunities as well within those companies. And so I think when we were partnering with them, we were just very focused on kind of how they've performed to date and what the overall market opportunity were. I think as I've moved earlier and earlier, it's been a little bit more focused on kind of the overall market opportunity at hand. So where is the company playing? And so specifically with a couple investments we've done recently in the cloud application deployment space and a couple others, I think looking at the tailwinds that AI has brought around just engineers needing more automations and time to market, I think an increasing or just a faster time to market overall for engineers and AI teams has brought together a lot more need for some of these rising infrastructure companies. And so that's been awesome to see. I think the team side of things matters a lot more as well. So understanding how the team's previous experiences has translated into their success at the early growth stage side of things and how that product market fit or team fit can translate for the longer term. So that's kind of how we think about things a little bit more here at O&A. And then when it comes to angel investing, I've been fortunate to support a couple founders there as well. And it's been awesome to see at the early stage when it comes to pre-seed and seed stage companies, how I can help partner with them and help grow some of the companies for the longer term. I think there it's really the overall vision. So thinking about where there's an opportunity for a founder with previous experience in a given vertical or given industry to come in and really kind of transform from that industry. And so, for example, one company I've been fortunate to partner with is Solely AI, and really love kind of what they're doing for the AI for doctor space, and just kind of the vision that Omar and the team has there.
Okay, I want to double click on like the developer tooling side of things. So I feel like there's a rising amount of like developer toolings in the space. Which particular use case that you feel like actually have the longevity to become like a Series C company later?
That's a good question. I think the biggest use case I've seen is just like time to deployment is how I would categorize it for lack of better terms. Just how can engineers or AI scientists, data scientists get to market as fast as possible, whether they're creating an AI application that's being hosted on the cloud or they're running some kind of very, very complex model that needs a ton of compute power. Companies, especially startups, as they're growing, don't necessarily always have that compute power in-house or don't necessarily have all the cloud applications hosted in-house. And so I think the biggest thing is just really the time to market piece. So helping founders and companies be able to scale to market as fast as possible. I think that's one of the big use cases I've seen so far, more on the infrastructure side of things. And then on more of the modular side of things, there's been a whole ton of new developments around companies like Wordware, for example, which just announced their seed today. I think they're creating awesome new technologies that are really transforming the way that engineers are thinking about and thinking about, and also creating new agentic platforms. And so that is super cool to me, because they're transforming the way that engineers are really able to do things today. And so been a big fan of some of these companies here.
Can we maybe I want to maybe double click on like what is something that engineering were doing before and then versus now, because like as a non-technical person we can always see like the no code toolings, as well as like the just basically there's a lot of ambitious predictions on like the definitely out of the world. So basically like you write a few line of, or like sometimes it's like you write in English and then the app is like generated on the side. How do you feel like in the future of coding is going to look like? Is that everybody just going to become a prompt engineer, or like what's a basic education for like a non-technical person kind of should have to actually like code something, or versus like actual developers? Like what are some specific areas that you feel like they should be more focusing on versus like studying the most like basic stuff?
Yeah, you mean like for
Like
non-technical people to study?
Yeah.
Yeah, that's a great question. I think honestly, just keeping up with the newest platforms and tools that are being developed in the space. For example, what Wordware is doing right now, it's super fascinating to me around how easy they're making it to create a lot of these new AI-based agents. And so I think keeping up with some of the newer trends, maybe not necessarily on the coding side of things, but more so just even on the understanding of new technologies and tool side of things. So playing around with the ChatGPTs, Claudes, and the Claudes of the world. I think that is ultimately what's most impactful, just to understand what's out there. And so that's probably how I would think about it. There's no specific new kind of code or new language that people that are non-technical today have to learn, but I think just focusing on what's available out there and tinkering with prompt engineering on some of these platforms has been most helpful to me, and I think that's probably what I would suggest to others as well.
I wonder, I totally agree with you on like I feel like everyone should definitely implement some sort of AI tool into their day-to-day life to like play around with it and then see if it's like gonna significantly help them. And obviously it will, but I wonder what's your thought process on like, since like from the investment perspective, like what are some major trends that you're seeing in the growth stage slash like early growth stage that are kind of interesting for the earlier stage founders to pay attention to? And since like I feel like every day maybe you're seeing a lot of like company that hits like the like millions of dollar ARR, how do you pick like one company versus another? You mentioned a little bit about on the strategy side of things, but maybe you could use like an example of like there are two companies that you obviously don't need to mention names, but like there's two companies that in the same space, like why do you pick one versus the other?
Yeah, that's a great question. So I think when we're thinking about early growth stage investments, there's a couple things that matter. So excuse me. Firstly, it's like the overall market opportunity that the founder is playing in, or what the overall product vision is, and how much we can see this growing within the overall market opportunity. And so I think that's the first thing broadly. The second thing is just understanding more about kind of the team structure, who's behind the platform, and the CEO who's really kind of led the vision so far. And so I think those are key things on more of the qualitative side of things. And then, of course, understanding more about kind of competition in the space, who's been there historically, if there's maybe some legacy incumbents, especially when it comes to some of the vertical software players. And then from there, how this new company can potentially kind of disrupt the entire ecosystem there. So I think that's what matters a lot on kind of the qualitative side of things. When it comes to kind of like early growth stage metrics, or kind of more on the quantitative side of things, I think generally we like to see some level of product market fit. And for companies, different types of companies in different industries, that means different things. But to give a general sense, I think we like to see companies having 3 million or so of ARR when we start partnering with them, just to see that level of kind of product market fit. That being said, we have partnered earlier and have partnered significantly later as well. I think it all just kind of depends on the specific stage and vertical of that company. And we like to see kind of accelerating product market fit, which typically means just accelerating revenue growth for those companies, or some level of accelerating traction within that customer base. I think for us, what matters is kind of overall efficiency. So what what the company's been able to achieve from a product basis, and then also from how they think about a burn basis. I think we're not entirely too critical on how companies are spending their money when it comes to early stage side of things, but just kind of a longer term strategy around managing capital and how they want to allocate capital to one, maybe create more of a technical mode, or two, grow their go-to-markets and sales functions and kind of drive that going forward. And then maybe three, how they're thinking about expanding the team as well, and more on the talent side of things. And so those are some of the things that we think about, and happy to dive into any of them as well.
I wonder, so like, what are some advice that you feel like your team have given to the founder on the scaling side? It's just since you guys have scaled like really big companies, we're talking C-level of like Twitter or Facebook, and yourself like coming from benchling, what are some kind of advice that you felt like made critical things on the spending side or on the building technical moat side that you have, like maybe you guys have given to the founders?
Yeah, for sure. Well, ultimately the biggest thing we can help with founders is truly just customer introductions and helping them out with getting to customers as quickly and as seamlessly as possible, I would say. And that comes through just kind of our network overall, and helping some of these startups get in front of larger enterprises, or maybe even kind of the SMB and mid-market side of things, getting introductions to some of our portfolio companies, for example. And so that's ultimately what helps the most in terms of just kind of that company's growth and our ability to also understand how valuable that platform and product is when we're bringing it kind of in-house to one of our own portfolio companies, or to potentially a customer in our network. And so I think that's one of the biggest things that we can typically offer from just kind of a go-to-market standpoint. On top of that, I think there's of course kind of the higher level go-to-market strategy questions around when should you hire sales folks, when should you hire account executives, SDRs, and how to ramp both of them at the same time. When do you need to bring on a sales ops leader? When should you bring on a VP of sales above all of those folks? Or if you should be more focused on just kind of outbounding pipeline generation and generating as much kind of contract opportunities as possible. And so that's more on the kind of strategical side of things. From more of the technical moat side of things, I think that's something we like to think about a lot, especially with some of the impacts of LLMs and implementations of wrappers today. And so we like to think about what additional workflows companies are integrated with, so that we can see if they are truly sticky within a customer's workflows or kind of daily production. And so we try to analyze a little bit beyond kind of the AI piece, how well integrated they are within a customer's tech stack, or within just kind of their overall workflows on a day-to-day basis.
For sure. I wonder, so like, and I want to start with like customer introduction. So how do you validate like certain type of customer, or like, let's say if a portfolio company.
You want your coffee, Maya?
Sure. Thank you. Sorry, I've been eyeing the coffee
worries.
too.
No worries.
Thank you. Sorry. This morning was a mess. Okay, let's say if a portfolio company asks you for an introduction to like a big tech company, let's call it like a Facebook or something, what would be the, I guess, like, who would be the right person to intro to them? And then you mentioned like seamless introduction. I feel like it's always a challenge when you're introducing so-and-so for a sales call, just because people are busy, and then unless something is like very like 99% gonna fit the bar, it's like a lot of times people would take a long time to even like get to the right person. I wonder, what does a kind of like go-to-market strategy look like for like the customer introduction? And like obviously like as a angel investor, like as like investing in early stage, I feel like doing diligence, a part of it is like introducing so-and-so to a customer, and then you evaluate it based off the customer's reaction as well. But like the frequency of, if you just intro someone to an important person every day, that's like also a lot. So how do you value like, when to introduce a team to the other party as well?
Yeah, sure. So maybe I'll touch on the last question first. So when to kind of really understand when to bring in a potential customer introduction. I think it ultimately comes down to both how we see the value of the platform, and so after diligencing the company, going through conversations with that given company, understanding their overall value proposition, we then think through what can be truly applicable from a customer standpoint. And oftentimes the folks in our network are people who we just know or who are our friends on a day-to-day basis. And so you're very right. We don't want to we don't want to over inundate it. I think it's more so focused on how much value that platform can actually bring to a given enterprise or a given startup company, and if we actually truly see a potential benefit to both sides, that's when we'll make the introduction. And so it's oftentimes a tough call, and you're right in the sense that we don't want to over inundate both sides of the coin, but it's focused on just how much value we can see bringing to both parties at the end of the day. So that's kind of how we think about it.
For sure. I want to maybe like double click on like from the sourcing perspective, from like growth stage, like of course you have like earlier stage investors and now at early growth, like, how do you filter out like, what I'm sure like I heard right now raising Series A is like the hardest as so many companies were able to raise seed before, and now it's like everybody is stuck here. And like I wonder, how do you think about sourcing as an investor, like from like either earlier stage investors or just like the company founder that you've been tracking? What type of like method that do you use to quickly filter out, like obviously besides like the AR side of things there, to like filter out deals that are like unqualified?
Yeah, sure. That's a great question. I think one that comes to the top of my head that one of my colleagues, Eddie Kang at Point72 Ventures, taught me very early on is just looking at their LinkedIn pages and looking at their employees and then their employee growth. That's oftentimes a very telltale sign. It oftentimes ultimately comes down to what phase of the economy we're in, but oftentimes just kind of looking at LinkedIn and looking at LinkedIn employee growth can give you a very clear sign of how the company has been performing. There used to be all these metrics around kind of ARR per employee and all of that, and it might not necessarily be as applicable now, but I think just understanding the growth trends on the employee side of things has been really helpful over time for me, just to understand which companies are growing more into the growth space, whether it's a Series B entering Series C company, or if it's a even seed stage company entering Series A. We still like to see kind of employee growth at the end of the day, because that's oftentimes a signal that the company is doing well. They're bringing on more folks, they're bringing on more talent to grow the team as a whole and to grow the company as a whole. And so I think that's one first initial indicator. There's a couple other things that we typically look at other platforms for like ad metrics, site visits, different data points around how many people are going to the website on a day-to-day basis. So that can typically give us a good telltale sign. And then I think also just looking at previous round funding as well as investors. And so how much they've raised historically relative to when they started the platform versus where they are today, and at what phases of the cycle they raised their capital, and then also thinking about how they've allocated some of that capital so far. And so if we're able to have initial conversations with the founder, we're able to get a better sense of that. But before that, we try to look at just kind of who participated or partnered with the company previously and how much funding went into that. And then as a result, are we seeing a huge kind of technical moat based off their public presence on websites and on LinkedIn, for example, on figuring out just kind of what that technical moat looks like.
I wonder, so like, is there like who are their past investor? Like, how do you kind of like take the brand name into account? Is there any kind of like, is this like a good thing or is this a bad thing? And also like, when you're evaluating how much they have raised and like how much they have spent, like where should people spend money in the earlier stage to get to like a good place into Series A? Is it like just product building, or like should they hire salespeople early on, or like should they? I mean, obviously, I always hear like the negative sentiment about marketing, but where should they be spending money as like an earlier stage founder?
Yeah, and sorry, what was the first question?
The first question was like I'm so sorry. My brain's so frozen.
No worries. I'm forgetting as well.
Weird day.
I can answer the second question first.
So like where to spend money? maybe
Yeah.
we start there.
I
Oh,
thi-
also, the first question was like the brand name investor or
Okay,
not
okay,
brand
yes,
name
yes.
investor. Yeah.
Okay, yeah. I think around brand name investors, ultimately, it's it's a very hotly debated topic within venture, and I think everyone has their own viewpoints, honestly, and they can fluctuate on any given deal or any given like quarter even. And so I think the way I see it is that if they've had brand name investors, it's a good sign that the company has done well historically. They've been able to kind of garner the attention of some of these brand name investors and are potentially creating some of these visionary platforms or products that could really transform industries, which is oftentimes what some of these brand name investors are really going after. I think some of the things that we have to diligence then is just really how they've allocated that capital, as you mentioned so far, and how they've really spent that budget, and how they kind of have been disciplined around spending the capital and thinking about capital needs. And so that's kind of how I would think about it so far. I think everyone has their own perspective around previous round investors and who's partnered on the cap table. I think ultimately at the end of the day, what startups, founders, and VCs want is just partners in the past who've really helped the business from a go-to-market standpoint, technical standpoint, or someone who's really been able to be a guiding force for the company. So that's what matters the most ultimately. And then on your second question, it was
Where to spend money?
where to spend money. I think it depends. So if it's a more technical platform, so something in the infrastructure or DevOps side of things, oftentimes it means at the early stages continuing to really put full throttle and invest into the infrastructure and technical moat side of things, because that's really where you see yourself differentiating from platforms and competitors for the longer term. And so I think that's where investment dollars typically go in, and continuing to build out more of a PLG motion. I think when you're talking about more B2B SaaS and vertical SaaS companies, then it's a little bit more spent on the go-to-market side of things. And so figuring out how you can direct sales channels or grow an account executive team, figuring out how you can bring on sales leaders to start scaling up the platform so that when you get to that Series A, you're maybe anywhere from 1 to 5 million of ARR, call it. And then that shows kind of your product market fit overall in the space. So it's really kind of just dependent on the company profile and maybe the industry profile as well.
What would say, like, let's say, like, if I'm building a vertical SaaS company in the fintech space, and assuming if I'm an early stage founder, and then I come to you to be like, hey, after raising money, we want to acquire like a really unique data set. Is it like a good money spent or not?
That's a good question. I'll say if I have to give a yes or no answer, I'll say yes, because it could potentially be a differentiator for the company later on, having these data sets within their platform. But I would want to dive deeper into just kind of what value this data set is bringing, and if competition, other platforms have it or have easy access to this data set. And so that's probably how I would think about it. On the fintech side of things, what matters a lot actually is kind of how the team has thought about regulation and data privacy, as well as the integrations overall within the ecosystem, because fintech is so well integrated today, and that's kind of what matters the most. And so if this data piece will help with kind of their integration with the overall broader ecosystem, I would think it's a pretty big value add piece. But there's a lot more to it, but maybe I'll say yes for now.
What would you say would be like, let's say I poached like someone who just who was like on the founding team, called like first 10 people from a unicorn company to join me and then I'm sure that's like a really positive sign from the outside, because like, a superstar just joined our team. But on the other hand, like the money side of things, I would assume like either there's a lot of stock was given to, not stock, but like a lot of basically just like I guess like it may cost a lot to hire someone, basically. That's what I'm trying to say.
Yeah.
What's your thought process on like, who to bring to your team that kind of demonstrate that it could actually work? And at what point should the company start focusing on like sales? And like if the CEO is like a really technical talent, who should be on their team to actually push the company forward?
Yeah, sure. So I think around the thing of bringing on folks from more of a unicorn background or very brand name background, I think ultimately it comes down to like team alignment, cultural alignment, and how well aligned you are with the rest of that kind of founding or early team. Maybe less the branding and kind of unicorn side of things matters a little bit less. I think investing into an employee base and talented individuals can definitely pay off for the longer term. And so I don't think I necessarily have any hesitancy around kind of bringing on folks who quote unquote might be expensive. I think it's more so around how well aligned they are with the mission of the company, how dedicated they are to helping solve that mission, and then also kind of what pain point or what piece of the puzzle they're solving within the team structure as a whole. So that's kind of how I think about it. Typically, less so from I think brand always helps, and having experiences at some of these companies that have scaled really significantly has given individuals that experience to be able to pass down lessons and be able to help guide companies to that level eventually. But I think it's more so when bringing on folks, it's more so about team alignment, how well they're aligned with the culture of the team, and how well aligned they're with the mission as well. So that's kind of how I think about it. And then on the second piece, I think the overall kind of mission of the company matters the most. And so having folks around the table who are around that mission and focused on that is kind of what drives the company for the longer term future. So that's what we've seen in successful companies.
Would you say you like the company should focus on like building a successful product first and then go to sell, or like should they just be selling in the first place?
Yeah, that's a good question. I think the important thing is finding product market fit first, and so figuring out like where in the value chain that company can differentiate itself and have some level of competitive differentiation, I think is most important first, because even if you're to sell, you might encounter kind of a leaky bucket later on. And so I think what's most important is to figure out like where in that given market. So for example, in Benchling's case, they found a huge market need within the life sciences community of scientists and researchers to really just be able to figure out how they can communicate and collaborate better, because they were previously storing all their samples and DNA on pen and paper or Excel, for example. And so figuring out where there's a market need and where the company can define product market fit first, I think is important. And then you can scale up your sales over time and really figure out how you can bring on more folks to lead the sales side of things. That's generally how I see it. I think there are, of course, market plays where it matters most to be first to market, and it's more of a land grab opportunity. But in those cases, I think that land grab in itself is more of a product market finding exercise. So that's kind of how we've seen it.
Totally. I wanna maybe maybe dive into a little bit of one of your other past company, Boulevard. So that's more towards like self-care backend platform. So for like maybe we could start with like you can give the audience a little bit more detail about like what the company does, and then we can dive into like to talk about the company building.
Yeah, sure. So big fan of the company. We invested in them at 0.72 as well. And at a high level, what Boulevard does is they're a vertical SaaS platform for barbershops, salons, spas, med spas, et cetera, based out of the LA area. They essentially help these barbershops run their businesses. And so whether it's booking, scheduling an appointment, or it's processing payments, allowing customers to figure out how they want to pay for their appointments or how much time to schedule, that's ultimately what they're doing for a lot of these customers. And so they've been able to grow really well in this space. And I think what they saw early on is just a big market opportunity, because historically what barbershops, salons, and spas were doing were they were collecting cash, for example, or they were figuring out how they could collect via credit cards on their own rails, for example. And so trying to do it all in-house, and they didn't have a great way to manage and centralize their entire business on kind of one specific operating system. And so that's what Boulevard ultimately kind of provided in terms of a value standpoint. I think some of the things that we really like about the business is that once they're sold or integrated with a customer, they're super sticky. So customers tend to use them and continue using them and use them even more going forward. And that's what we generally like to see with some of these platforms. And as they've flowed in more of the payments piece, so more of the payment processing side of things, I think it's been great to see just how customer spend has continued to increase there as well. And so I think overall what's played out there is that Boulevard entered into a space that there was a huge market opportunity or market need in, and then they've continued to grow just very well across the US so far. And hopefully there's more and more barbershops, salons, and spas here in the SF area as well.
I wonder maybe I don't know if you know like the earlier founder stories, like how do people really onboard, let's say
Mhm.
like 1,000 barbershop in
Mhm.
LA? Like do they have to actually go into like each store and ask people, hey, you want to buy the software, or
Mhm.
what's the kind of sales process to SMBs?
Yeah, I'm sure the team did at some point. I think eventually it became more digitized, but early on it was really just about getting the name out there and figuring out how to acquire as many customers on the smaller mom and pop chain side of things, and figuring out how they could just get in front of them. And so
Mhm.
a lot of times maybe that was more on the analog side of things, going directly to their stores and just trying to onboard them that way. And so oftentimes that's what happens with kind of vertical SaaS platforms, where there just wasn't great tools in the past. And so in order to get in front of customers, you're truly getting in front of them physically, oftentimes, in order to actually just get their attention. And so yeah, that's kind of what we've seen there, and then across a couple other companies as well.
When you're evaluating it, it seems like you guys invested in the Series C. Like, what were the benchmark kind of look like when it comes to like Series C investing? Like, and what are some like ways that you could predict that a company that could keep generating the revenue?
Sure. That's a good question. I think benchmarks are, yeah, I mean, there's a lot of benchmarks out there. What I'll say is that what we generally look for is the companies that are at scale, so probably 10 million or so of ARR and above at the Series C point, and still growing very well. And so maybe that's doubling year over year, tripling year over year.
Oh yeah, so that means that's triple, triple, double, double, double.
Yeah,
Two.
that's a very common, very common kind of metric that we like to look for as well. I think it's tough to always necessarily kind of back into that, because with a lot of the companies that are growing nowadays, especially in the AI world, they're growing so much more rapidly, for example. And so we've seen companies that have grown from, call it 10 to 40 million of ARR in a given year, or maybe even 5 to 40 million of ARR in any given year. And so those companies are really bucking the trend in terms of the triple, triple, double, double, double. Triple, triple, double, double, double in itself is already a great metric for any company. If they're able to achieve that, it's already insane growth for that given platform. But I think the AI world has just shifted kind of benchmarks a little bit. So typically how I like to think about it is just in great growth overall, sometimes insane growth that we see, strong product efficiency as much as possible. And so in the AI side of things, it's typically a little bit different, especially when it comes to infrastructure and DevOps player, to get SaaS level margins early on, because you're focused so much on the compute side of things and chip side of things and paying for that upfront. And so oftentimes we're looking at just kind of what's rational from a margin perspective. And then also just kind of how the company has allocated capital. And so we're comfortable with higher levels of burn if the company has been able to create some kind of mode or competitive differentiation based off of how they've spent the capital so far. So that's kind of how we think about it. And then we love companies that are very sticky with customers over time and have seen some level of upsell or expansion within their customer bases, whether it's upsell in terms of number of users, number of seats, or just in terms of number of features or products that they're selling to the end user. That's typically what we like to see when it comes to companies that are growing super quickly.
Let's say if a company, let's say call it like an inventory platform. Let's say if you're a shop that's maybe selling coffee or like water
Mhm.
or something, like so like or selling something on Shopify, and then let's say in the backend inventory it's like you have to buy the stuff or whatever. Like so let's say if it's like an inventory platform that leveraging AI to help like traditional businesses to do the inventory, what would be the question that you ask this type of like kind of like traditional sense of business? Like you can already name, let's call it like 5 companies that's the same thing in the category. Like what would be this thing that you pay attention to in like an early growth stage that you would ask the founder to like evaluate the company?
Yeah, on the like inventory software side of things, essentially.
Yeah. Or like the other day I saw another company that does like, inventory for restaurants. So let's say like you need like 5 cucumber today and then you need like 7 fish or whatever. Like people are saying like now, even nowadays, like the restaurants still like call in the morning to like get the inventory, like just ask people to like bring in stuff on the phone in the morning. So like nothing was like digitized whatsoever. Let's say if they're trying to like go into that kind of industry, I feel like that's very similar to what Boulevard have done ish. So like how do you think about like the technology versus like the go to market, and what would be the question that you would ask early on to the company to kind of evaluate this kind of stuff?
Yeah, that's a good question. I think there's a couple of things. When it comes to inventory management software, it's like, firstly, I would want to better understand the value proposition or the overall kind of ROI that they're bringing to customers. I know quite a few folks, or I've gotten to know quite a few folks in the restaurant space, either running very small restaurants or even kind of larger chains overall in Seattle or the San Francisco Bay Area. And I think ultimately bringing them value is what matters most, because restaurants are operating at such thin margins already. If you're not kind of bringing them significant value, then it's ultimately not really worth it for them. It's better for them to even kind of go out and buy the inventory themselves, or thinking about restocking manually with pen and paper. And so I think understanding the true technology and seeing how much value they're actually bringing to customers matters the most. I'm thinking about my friend right now and just kind of how he would actually even think about a new software like this. So that's the first thing. The second part is I think I would think about like how well integrated they're with all the other systems that they have in the restaurant. Albeit restaurants might not have a ton of other software on the back end side of things. I would want to better understand like how they're focused on the POS side of things, the point of sales side of things, the payment side of things, as well as like their overall back-end management side of things, if they have some kind of platform there. If not, then that's totally fine as well. So I think how well integrated they're within that overall branch or that given restaurant. And then maybe the last thing is just if I were to evaluate it from an investment standpoint, how they've continued to grow the business and what they're focusing on from a go-to-market standpoint. If they've started off like regional within some kind of restaurants, and then what specific market of restaurants they're focused on. If it's the higher end chains, the larger brand names, or more of the mom and pop shops. I think that matters a lot, because even for an inventory software space, they're impacted by trends in the restaurant ecosystem. And so in a down economy, for example, you might see more restaurants unfortunately going out of business. And so that oftentimes impacts stickiness of the platform. And so if you're thinking about kind of long-term retention or long-term churn, that matters for some of the metric side of the business.
Another quick question I was thinking is like, some of the startup founder, at least for the early stage founder, they only have like 1 or 2 really big client. But like if the client just like went off with like another software, like they're kind of having a harder time. So how would you think about like diversifying on the client side? And like, or let's say I've chatted with founders that they're like, hey, our client is like actually one of our backers, but but on the other hand, like yeah, they do own, let's say 7 restaurants or something, but on the other hand, it's like, what if this client is gone, and like how are you gonna keep just adding more clients to your client list? Like how do you think of like the core, like the state of like the early traction, and when people like present to you, yeah, like we have reached like $1 million ARR, but on the other hand, the $1 million are all coming from the one source of like either mentor or like client base?
Yeah, for sure. We see that quite often actually with some of the customer bases that we're looking at, or companies that we're partnering with, and it ultimately comes down to just like differentiation of that platform, and also how sticky that potential customer thinks of that product. And so the best case scenario is to be able to speak with that customer, with that with that partner and just gain a better understanding of their perspective, if they've
Mhm.
how they've thought about stickiness of that platform, if they've ever thought about using something else, if they are currently thinking of using something else, and just trying to evaluate how sticky the platform has been for that given customer. I think we're comfortable with customer concentration in the sense that these larger name customers could potentially be one of many in the future. And so the diversification might come later on, but the growth could be propagated by that given customer up historically. And so I think that's something that we try to diligence in terms of just how stickiness that given big customer has thought of the platform so far.
I know that we're about to run out of
Oh
time,
yeah,
but
yeah.
do you have like kind of 5 more minutes or so?
Yes, I think so. Yeah.
Okay. So maybe I wonder how would you think about, let's say, like how do you test the stickiness? Just because I feel
Mhm.
like when a startup that present you with like a client list, everybody is sticky. But on the other hand, like when there's like a cheaper platform present like immediately, like it's super hard. How do you think about like, what are the question or like diligence that you would do to like kind of test out these kind of stickiness set of things?
Yeah, yeah. Stickiness is a pretty core part of growth investing, and for us, it's trying to back channel as much as possible, and speaking with either customers or
Mhm.
potential customers and prospects, and thinking about how they've thought about that platform so far. And so we like to diligence things around just like how much they've spent to date, if they've expanded within the platform. And then also looking at historical churn. So if there's been any customers that have turned off the platform in the past, what the reasons were and why they decided to turn. And if not, then trying to get a better understanding of just the customer base and customers that have come onto the platform so far, how that platform has been differentiated for customers, and then if they're thinking about using it for the longer term, and trying to diligence more on that just through live calls and conversations with some of these customers.
And another quick question on that side is like not directly on that side, but it's like I've seen a lot like AI
Mhm.
agent that coming through. Like, so this will be our last real question and then one minute fire round. So I've seen a lot of AI agent that's coming through, like either it's like from let's say like code testing perspective or just like helping you booking out Uber. But how do you think about the AI agents from, the investing standpoint?
Yeah, that's a good question. There's a lot of AI agents out there today, and it's all about like how well differentiated they are, and if they're like a platform that's just using a lot of LLMs, and how truly differentiated they are from a workflow perspective. And
Mhm.
so, on the agent side of things, if they've really built additional features for that given vertical or that given customer to find differentiation within their overall kind of tech stacks. And so
Mhm.
I think that's what matters the most first, on the first side of things. And then maybe secondly, what I'll mention is on the agent side of things, it's getting easier and easier to build an agent today, but I think what matters the most is how much customers are finding value from it. And so whether it's a usability side of things or integration side of things, or just how well connected they are with the customer base from a selling standpoint, I think those are things that can differentiate one agent from another given agent, especially when it comes to some of the vertical SaaS players.
Amazing. Okay, so we're about to hit the time. I want to stop with maybe like a 1 minute fire round.
Mhm.
What's your favorite book?
Ooh, favorite book. It's actually a Mamba Mentality by Kobe Bryant. He's one of my idols, and it's actually not a super comprehensive book, but it's my favorite book of all time and great read.
Amazing. Who made the biggest impact in your career?
That's a good question. Um, there's been a lot of folks who have mentored me, and a ton of folks who I've partnered with at Point 72, and here at O1A. But if I were to just say, I would just say my parents, because they help just support me along the way, and they've helped guide me. They're not in VC by any means or any financial industry, but they've supported me along the way. And I think that's what has mattered the most, just in terms of how I've continued to grow in my career in the VC side of things.
Uh, who would you invite to your dinner party?
Who would I invite to my dinner party? It can be anybody.
It can be anyone. It's your party.
Huh. Okay, I would probably invite some athletes, maybe my high school friends, and then um, probably a couple of my idols. I'm happy to list them, but there's so many of them. So
Where can we find you outside of work?
Yeah, I'm based in the San Francisco Bay Area, and so oftentimes just all around the city for different events. But for the most part, we're in Jackson Square or North Beach areas, or I'm back home in Seattle a decent amount as well. And so those are the three areas where most often. And then outside of work, you can find me on LinkedIn at any time as well.
Amazing. Well, Cody, thank you so much for coming on the show today.
Thank you. Yeah.
Sorry again
No
about
worries.
the
Thank you so much
crazy
for having me.
beginning. Let me quickly